the Teaching Tax Flow podcast, where the goal is to empower and educate you to legally and ethically minimize taxes paid over your lifetime.
Hey everybody, and welcome back to the Teaching Tax Flow podcast, episode 94. We are deep into the Olympic Games, and today we are going to talk about those athletes and taxes and what they have to do with each other. So, as always, let's take a brief moment, though, and thank our episode sponsor.
This podcast is brought to you by Legacy Lock. If you are new to estate planning or simply need to review your current plan, Legacy Lock makes it as easy as pie. Legacy Lock is a unique platform that enables you to easily complete your attorney-drafted documents conveniently from the comfort of your home or office. Your first step to this peace of mind is simply visiting teachingtaxflow.com/legacy.
Welcome back, everybody. We are going for the gold today. That's my cheesy dad joke of the day. You like that one, Chris, don't you?
It's better than most of your jokes, but that's not saying much. Thank goodness there's not an Olympic medal for dad jokes.
You know, I would be up there, man. I think I would make the podium for that. And I don't know exactly what sport it is, and I'm going to mess it up. But, you know, we keep the bar pretty low. Oh, there's another drop in.
Well, there are bars in gymnastics, right? They're the uneven bars. But, John, a couple things. One, I believe the uneven bars is for female participants. And two, the last thing any listener wants to hear or envision seeing is myself or yourself flinging our bodies around on the uneven bar. Trust me, people, you do not want to see that. That being said, in many countries,
the bigger they are, the harder they fall.
Yeah, in many countries, Olympians are huge celebrities. In the United States, a lot of them are. We have so many other college and professional sports that occupy us. I'm going to tie something in, John. I'm going to embarrass you. Let's do it. Live on this podcast. So we got to spend pretty much all last week together at Taxposium in Orlando, Florida, which was put on by the National Association of Tax Professionals. It's basically the Super Bowl of tax conference, Super Bowl conference, kind of like the Super Bowl for tax professionals. We always do. This is our second year at the event. We met tax professionals from all over the country, and John and we sat down to eat. We just had our speaking engagement conclude and sat down. There weren't many tables open because there's over 1,000 people, I believe, attend this. So we sit down at a table with strangers. 3 sweet ladies were next to us, and they started talking about taxes and tax planning, of course, and pot. And then they're like, "Oh, the pot, yeah, the pot." They said something about our podcast, and I said, "Yeah, well, if you listen to our sister podcast, which is for tax professionals, you get a free continuing education credit. It's called the Mr. R Show." And then she asked about this one because she saw that we had a podcast, and this woman pulls up her phone, and she's like, "Oh, I get the Teaching Tax Flow podcast." And I said, "Oh, that's awesome. You're already listening to it. Thank you so much." And she goes, "Who's the other guy on the podcast?" I said, "Oh, John, the co-host." "Yeah." I said, "He's sitting right next to me." And she's like, "Oh." And then she said, I didn't think I'd get to meet a celebrity. So apparently, as my kids would say, and anyone who has children, John, you're carrying the show. You're carrying right now, buddy. So I am so lucky to have you as a podcast co-host. And that made my week. I just loved hearing that.
Wait, we have a fun time doing this, right? I have to try to bring something to the table because, as everybody knows, and I like to poke fun of myself, I am not a tax professional. So I'm not bringing, back to our Olympic references, right? Keeping the bar kind of low on my end, right? And then you guys just raise the bar. But, when we're not talking about college bars here, that's a whole nother topic discussion. And, listen to the episode about business deductions, and you can make that decision if your bar tab is deductible. But this is a different topic.
We're going to talk. So we like to be very current with our topics, so we're going to jump into the Olympics and taxes. But I want to say, in all seriousness, John and I getting the opportunity to attend this conference, to speak at this conference, it is a blessing. It is something that's humbling. And what it does, for me personally, is if I come back to historic, beautiful Franklin, Tennessee, a better CPA, a better tax planner, because I learned so much from the tax professionals. And we know that the tax professionals are the ones that are, we might talk to a couple thousand people a year within the teaching tax flow community, but part of that community are hundreds of tax professionals, and they talk to thousands of people. So getting to speak to them, eat with them, network with them, learn from them, teach them, it is really invaluable. And the face-to-face, interaction, and it's a sacrifice. It's a financial sacrifice. It's a time sacrifice we all go through, but it was worth it. And I'm coming back excited. I'm coming back really confident in what we have built here at Teaching Tax Flow and our community. Not shameless plug for our private Facebook group. If you're listening to this and you're not part of Defeating Taxes, that's defeatingtaxes.com, do yourself a favor and jump in there. We get so much interaction, so much learning. It used to be where John and I were doing all the posting. Man, we have people posting questions, ideas, other tax professionals jumping in, people looking for references, because what we understand is that ideas are cheap and implementation is valuable. So if you're a taxpayer listening right now, feeling like, or a tax professional, I think one of the themes, John, was for me was, this sounds great. I know tax planning and strategy is important. I want to take my practice to that next level. I want to help my clients with this if you're a tax professional, but I don't know how. I want to ride a bike. It looks fun. I can go places. I need to wear a helmet. No one's ever taught me how to ride the bike, because once you know how to ride it, you always know how to ride that bike. So feeling just honestly, that we have a mission we're here. And, my mom always said that what good is your knowledge if you don't share it? So we're here to share what we have. But the dirty secret of having these opportunities to speak and these things is that we learn way more from the people that we talk to than they could take from us.
Oh, yeah. So, and Chris, going to those events is always, I always love it too. And I would probably say, on any given day, we're probably split 50-50, 75-25, depending on the topic, on what the audience of this podcast, the content that we put out to Teaching Tax Flow, between tax professionals and we'll just say taxpayers, right? So I think it kind of flip-flops again, depending on the topic. But me, again, not being a tax pro, will call me John Taxpayer and you, Chris Tax Pro. Going to these events, from the taxpayer perspective, it really is cool. There's no other way to put it. Call it cheesy, whatever it is. It's we'll say an honor. It is. Not like anybody just walk into these things. You can't if you pay enough, probably. But it's so cool. It's so enlightening, invigorating, inspiring, whatever we want to call it there. Just seeing how much actually goes in to the education side for tax pros. So those, fellow taxpayers out there, and again, we're going to get into these athletes and these taxes here and kind of wrap all this together, but it's really neat to see how much value is placed on education. But then also this one, Chris, I think you'd agree with it. At last week's event, it was really, really neat to see how much emphasis was really being placed on technology and for lack of better terms, modernizing the profession. I didn't make it to the keynote. I think the commissioner of the IRS actually kicked things off on the first day we were there. And from what I heard, a lot of mention was made on technology. TikTok came up multiple times on there. Other platforms, AI. I think there was 5, 6, maybe 7 sessions just throughout those 3 days, just on AI and taxes and how it's being used morally or ethically being used in tax firms. Not just cutting out the middleman, but complementing things, doing a better job for everybody. And we always talk about tax planning, right? So tax planning was a huge topic there, which, again, it's great to see that is now a thing. It's no longer the joke, right? Where financial planners look forward, your accountant, your bookkeeper, your CPA only looks backwards. I think it's great to see them kind of merge. And, obviously I've seen, Chris, you and your team looking forward for over a decade, but it's kind of the joke, right? Is, my accountant air quotes, accountant or my
Right.
bookkeeper, wears a pocket protector and only looks at what I give them. It's great to see that is no longer the case, or at least the industry is pushing it to no longer be the case. So without further ado, let's talk about these athletes, man. I'm itching here because this is how I live vicariously through athletes, having played ice hockey, 10 years ago. Then I'm intrigued on this one. So let's raise the bar.
Ooh, we're raising the bar. Yes, we are obviously so proud of our American athletes over in Paris. And we talk, teaching tax law about you have to build a team. And we know these athletes have teams of people that help. I think my favorite event's probably the swimming, because I did swim in high school, didn't swim, barely avoided sinking. So swimming might have been, but no, in the track and fields is amazing. So, and the volleyball is fun. My daughter plays volleyball and does some sand volleyball. But, I was thinking, John, when we were talking about show topics, like I'm always wondering about their tax situation, right? And quite frankly, we started diving in. We've had some professional athlete clients. We currently have some clients that are professional athletes, but none of them when they were an Olympian, if they were. So there are some special rules for Olympians. Let's start diving into it. So, the first thing we have to know is that Olympians receive prize money from the USOC, that's the United States Olympic Committee, for winning medals. And, back when I was growing up, Olympians were always, I don't even know if they got any prize money because they had to be amateurs, but now they could be professionals. A gold medal pays $37,500, silver $22,500, bronze $15,000. So I was watching one of the swimming meets or races a couple of days ago, and someone lost by 1/1000th of a stroke, or of a second rather. I think it was the men's 100 breast final. So that was 75. He went from silver to bronze, and that was like a $7,250 1/100th of a second. Multiply that by how much you would make per hour. I'm sure they're the highest. That was the most valuable 1/100th of a second in that person's life. So that's interesting. So those are some. So when you think about some of those especially swimmers that could win, 5-6 medals, that could be significant. So there are definitely get paid in that prize money. Now this is what's tricky, John. Along with the value of the medal is considered taxable income. So that brings up a point that a lot of people miss sometimes. Any type of compensation is taxable. Now, there are some de minimis gift rules, but a lot of people don't know this, that if you're in a game show and you win a car, you have to pay tax on the value of that car. Not just sales tax, but income tax. So the value of the medal is part of taxable income. Now, I'm sure that most Olympians would happily pay the tax on the value of that medal.
That'd be the easiest check they ever wrote, probably. Sure, double it, triple it if you want to. My Wheaties endorsement will cover the rest of it.
Right. So I never thought of it. I didn't, and I've been in the business over 20 years. I didn't realize the value of the medal is taxable income. And then once I thought about it, I'm like, of course it is. So, but before I hate to say, someone pours water in your cereal. There's other phrases we use, as you said, Wheaties, or you feel too bad for these people. There was a law passed, signed by President Barack Obama on October 7th of 2016, called the Olympians and Paralympians Act of 2016. And what it did, now, John, one of the 3 laws of teaching tax law, the tax agencies are your involuntary business partner. Tax laws are written to encourage and discourage certain behavior. So we didn't want to penalize these athletes too much. So President Obama and the Congress agreed that they exempted Olympic and Paralympic athletes from federal income taxes on the value of the medals and prize money, with a caveat. This exemption applies to athletes with an adjusted gross income of $1 million or less, or $500,000 or less if they're married filing separately. So if the only income you had was winning 3 gold medals, that income would be exempt if you're single or married filing separate up to $500,000, married joint, or single up to $1 million. So you can make up to, if your adjusted gross income is $1 million or less, yeah, it's a bummer. You have to pay tax on that, or that prize money and the value of the medals is taxable, but it is exempt under this law. We're going to run through a real life example. Now,
hey, Chris, a quick question before we jump into that part. So I don't know the answer to this one, which is why I'm actually legitimately asking it. And I imagine Olympians are the same, but professional athletes. So say you're in the States, pro hockey players, basketball, baseball. Are they contractors or are they actual employees?
Almost all professional athletes on a team sport are employees, especially hockey, baseball, basketball, football. Those contracts are collectively bargained, and they all have a union, a players' union. Now, some athletes could be an independent contractor. So that athlete could wear the independent contractor role hat. So let's say you're Johnny T, Red Wing goalie, and you're paid through the Detroit Red Wings in a collectively bargained arrangement where you get paid a W-2. But your buddy down in Florida says, John, I'd love to see you come in and speak at our camp. You're not an employee of that camp. That would be 1099. That would be a subcontracting agreement. So you could be both, but your primary income from the team, most people in that business call them clubs, would be on a W-2. So your adjusted gross income, if it's over $1 million, then their medals and prize money would be taxable. If that are AGI, $500,000 for married separately. So what some people would do with some tax planning might be this: won an Olympic medal. Hey, I would like to for you to endorse our product for the next year, 2 years for a couple $1 million. No problem. Maybe they arrange some of the compensation to get pushed into 25 and 26. They extend that contract and they stay under that $1 million for 2024 so that all of the medal income is tax-free. So there's always tax planning that you could partake in, or maybe they create a separate corporation and put themselves on a W-2 for $990,000. There are a lot of things that you could potentially do to plan. Now, you also have to consider state income taxes. Those obviously vary. We don't have really the capacity in this podcast to go through each state. But ultimately, you have to remember, hey, this stuff's taxable. When you win a medal, the value of the medal and the prize money. That being said, there is an exemption under that United States Appreciation for Olympians and Paralympians Act of 2016.
And I imagine too, with most Olympians, right, it's the cash kind of rolls then after they return home, right? So that's your endorsements, everything else. Or like you mentioned too, a lot of them are pro athletes. So we wouldn't call it just for the fun of it. There's pride and bragging rights involved there, but they may return home back to their respective full-time teams, right?
Absolutely. Here's the other thing you have to consider. We're talking about this is focused on the United States tax. They might earn income from a foreign country that's taxable in that foreign country. So they might have to pay tax in that foreign country. And let me give you an example. Let's say you're Johnny T, hotshot goalie of the Red Wings.
Oh, yeah.
You win the gold medal. And for some reason, someone in Canada who would probably be upset that the Americans won the gold medal say, hey, I'd like you to come do a camp for us. You go to Canada, you go to Toronto, and you do some camps. You get paid as an independent contractor in Canada. You would pay Canadian tax on all of the income earned in Canada. Because you're a U.S. resident and tax resident, rather U.S. tax resident and citizen, but most importantly, tax resident, you would also pay U.S. tax on that income earned in Canada. Now, You might be getting upset. You might be wanting to throw the gloves off and throw down because of this double tax. Here's the good news. You have to look at the tax treaty. And what tax treaty says with the U.S. and Canada is it says, John, yes, that income derived in Canada is taxable in the U.S., but we're going to give you a credit on your U.S. return, a foreign income tax credit for any tax you paid in Canada. And typically, the Canadian tax is going to be higher than the U.S. tax, and you're not going to owe a U.S. tax on that. Now, we do have several people in the teaching tax flow community. Actually, John, we had a wonderful dinner with the group out of Tennessee at the conference. One gentleman, very sharp gentleman, his specialty is helping Germans that come to the United States or U.S. taxpayers that move to Germany. So each country has different rules. So you have to consider where that income was derived. So there could be some foreign tax aspects of what we're talking about. But that income is taxable. And we're going to talk about and typically the Olympians are going to be considered independent contractors.
So really, if they're independent contractors too, I mean, they're probably, well, I don't know about that. They're really paying for everything on their own, right? But sure, there's a lot of expenses. Obviously, you're getting there, or if you're traveling as a team, I'm sure that some of those expenses are absorbed. So, maybe the write-offs, deductions, etc., aren't as high as one may think, right?
Absolutely. So those just like anyone else, Olympians can deduct ordinary and necessary business expenses. We have a podcast on what makes it deductible. Incurred in their athletic training and competition. So that's travel, coaching, equipment. So let's give an example, John. This might be one of those rare situations where someone could legitimately deduct a sports massage or some type of hiring someone to help with their stretching, their performance, where that would typically be a personal expense. Is it ordinary and necessary? We all have coaches in the equipment, and then they are considered self-employed. You made a great point. Typically, they're going to be, because they're not a employee of the United States, right? They're paid by the USOC, United States Olympic Committee, as a subcontractor. Now, do some of these people set up corporations? And I don't know, because I don't have any clients that are Olympians yet. We would like some. So, hey, if you have a client that's an Olympian, jump in at Defeating Taxes and run it down for us. But I would assume that they're all independent contractors. But yes, as you mentioned, John, they're going to pay tax on their net income, not their gross income. So in the situation where we have an example, let's assume an Olympic athlete wins a gold medal in these Summer Olympics in Paris. All right. They're going to get $37,000 of prize money. Let's say that their Olympic medal is worth $5,000. Now that's an interesting question though, but let's assume it's worth $5,000 and it's $42,500. Why do I say it's an interesting question? Does who win the medal and what sport it is affect the value of the medal? Right. I mean, if you won the skeet shooting medal, bronze, which great. I mean, any Olympian is something to be very respected. Versus you win the female overall gymnastics medal, and you're famous. You're like Simone Biles or some super famous person, or a swimmer like Michael Phelps when he was, a very well known. Is that medal worth more because Michael Phelps won it versus a sport that's not as popular?
It's a good question. I'm almost envisioning this. It's almost being like walking into a pawn shop, right? Like when you get the reaction of, oh, that's cool. Or somebody being like, oh my gosh, do you know who this is, kind of deal. So, perceived value in a sense.
I would say that they probably assign a value of what that medal is worth, regardless of who wins it. I think that's probably what happens. But anyway, either way, let's assume that the athlete made $500,000 that year. they wouldn't have to pay federal tax on the prize or the value of the medal because they're under that exemption. So that's all laid out in that law. So takeaways
and
here.
I had no idea that this existed at all. So this is really neat to see and kind of look through with you.
It is very interesting. I mean, the takeaways are, 1, medals and the value of the medals are taxable. 2, because of the United States Appreciation for Olympians and Paralympians Act of 2016, I would imagine the vast majority of people would be exempt from tax. And then 3, you might owe some foreign tax on income, because that Olympian might do other things. Think about when you have the World Championship. World Championship might be in Tokyo. You could have some tax implications there. Now, I know there are some exemptions for special events as well, but no matter what, you still might do some work in a foreign country that's taxable in that foreign country. As a U.S. tax resident, you can get a credit in the United States for the tax you paid to another country as a rule of thumb. And lastly, let's just band together and cheer for our Olympians.
Absolutely. Now you got me writing a note here saying to watch the live medal count too, so kind of see where we're at. And then I can live vicariously through them too. Then envy, not an envy of the tax they'd have to pay on something the size of a coaster, but there's a lot more value in that than the monetary value you'd have to pay tax on. So I look forward to it, man. I don't even know, how long did the Olympics go on? Isn't it like 4 weeks or something total, start to finish?
I don't know. It's a solid 2.5 weeks for sure. I'm not 100% sure.
Definitely longer than our podcast episode. So you guys will be hearing from us a couple more times before the Olympians all head home. So way over there in Paris. So we look forward to the outcome. And Chris, thanks for running through this with us again. And this is kind of an interesting topic that doesn't really relate to, we'd say, 99.999% of us, but I think it goes into some pretty good depth on just how complex all the tax codes are, right? So they've thought of everything, well, not everything, but a lot of things that even if we think, it's so far and few between, so few people this would apply to, it's in that, 35.5 million pages of the tax code. So it's good to see this. It's good to run through these things. And again, to kind of reiterate what we talked on, a little bit earlier in this show, as me and Chris were talking about last week down there at Taxposium in Orlando, Florida, the smoldering, steaming, humid heat, call it. They're doing a lot. So the IRS is doing a lot. I mean, this obviously is not a show sponsored by the IRS, but I can say as a taxpayer, I'm very comfortable on the efforts that they're putting forth. They're not just, out to get you. But also to Chris's point, what we talk a lot about in TTF is, if you don't pick your tax, the IRS will, and they're not necessarily going to be in your favor. Heck, they're in business. It's in the name of the organization, the Internal Revenue Service. It's not the Internal Charity Service. So they do their job. You guys, everybody, you do yours. Lean on your tax pros. Lean on your board of directors. We always talk about here as well at TTF. And as always, we will see you back here on the podcast next week, roughly the same time, but a different time. See you soon.
The content provided is for educational purposes only. We encourage you to seek personalized investment advice from your financial professional. For all tax and legal advice, please consult your CPA or attorney. Investment advisory services are offered through Cabin Advisors, a registered investment advisor. Securities are offered through Cabin Securities, a registered broker-dealer. The content of this podcast does not constitute an offer of securities. Offerings can only be made through an offering memorandum, and you should carefully examine the risk factors and other information contained in the memorandum.